Good afternoon aspirants. UPSC is changing the gears. What about you? In this video, I am going to discuss an important topic for you for your UPSC Prelims examinations and mains examinations. Without further ado, let's delve into the topic. Did you see this question? In recent 2025 UPSC Prelims examination, the UPSC is asked about BRSR report, Business Responsibility and Sustainability Report. The difficulty level of this question is very easy, but the UPSC has caught the students or aspirants by surprise. In recent years, the UPSC is shifting the gears. It's gradually moving away from money market to capital market. Means it is trying to strike the balance between money market and capital market. And it is your turn, aspirants, to press the pedal and catch up with the UPSC. Did you get my point? Without further ado, let's delve into the topic. The topic is ESG bond. What is an ESG bond and why it is in news? And why L&T is here, Lawrence and Chuburo. First thing is first. What is an ESG? Acronym of ESG. Environmental, Social and Governance Bond. This is the full form of this acronym. And why it is in news? Recently, Lawrence and Chuburo has raised 500 crores of capital by issuing a ESG bond with a coupon rate of 6.35% and with a maturity date of 3 years. Did you get my point? It is clear that L&T has raised the money by issuing a bond named ESG bond. And how much it has raised? It has raised 500 crores of capital. With coupon rate means rate of interest is 6.35% rate. In my earlier video, I have explained everything with respect to bond. If you don't have basic idea with respect to bond, please go and watch that video. And with a maturity period of 3 years. This is the bond, right? Why it is in news? It is India's first listed ESG bond. Yes, it is India's first listed ESG bond. It is listed in NSE, National Stock Exchange. India's first listed bond. Did you get my point? That is why it is in news. First thing is first. In this video, I am going to explain these topics. What is an ESG bond? Who is an ESG investor? What is greenwashing? What is the role of SEBI? And what is BRSR report? Business Responsibility and Sustainability Report. Let's delve into the topic. The definition of an ESG bond. What is an ESG bond? How it is different from normal bond? ESG bond also a debt security that issues to raise the capital, right? But it will prioritize those projects which have positive impact on environmental, social and governance. Did you get my point? It is same as the bond or any debt security, and issued to what? Issued to raise the capital. For what? For the projects. For the projects that have positive impact on environmental, social and governance. Positive impact on ESG. I am going to use this acronym in this video. Please remember this full form of this ESG. Environmental, social and governance. This is the definition of ESG bond and how it is different from normal bond. Did you get my point? Yes. Then who is an ESG investor? And how this person is different from normal investor? We all know normal investors, right? Who are the classic example? Rakesh Jhunjhunwala is a ace investor in India. Warren Buffett, Peter Lynch, and many more people, right? Vijay Kedia is also an ACE investor. And how these ESG investors are different from normal investors. See what happens if a normal investor wants to invest in equity market, especially a company's equity or in bonds, corporate bonds. What he will do? He will check the financial statements of that company. Financial statements. Are you aware of this word? In financial statements, we have two statements. One is income statement. Those who are preparing for UPSC, EPFO, they are aware of these words. Income statement and balance sheet. So income statement we have revenue and expenditure and profit. In balance sheet we have assets, liabilities and equity. This is a brief intro with respect to financial statements. And how ESG investor is different from normal investor. An ESG investor, he prioritize a company's operations, a firm's operations impact on environmental, social and governance. A firm's operations impact. So did you get my point? What is the fundamental difference between a normal investor and an ESG investor? Impact on ESG. So that's how he will choose the companies to invest. Clear? I hope this concept is clear. Fine. What is the example? I would like to explain this topic with an example, right? European Union. Here, European Union. I will use this part of the board. European Union. What's with the European Union? See, recently if you follow the news, what the European Union has done, it has introduced a tax named called carbon tax on steel imports, right? We also known as CBAM tax, Carbon Border Adjustment Mechanism tax. What is the purpose of this tax? The European Union believed that the steel products produced in Asian countries, especially India and China, emits more carbon dioxide than the steel produced within the European Union countries. Did you get my point? So the EU has said that it wants to create a level playing field for those companies within Europe and companies who produce steel in Asian nations, especially India and China. Level playing field, LPF, between Asian countries. I am taking the example of India and European Union nations. Take the example of Germany. Why Germany? Germany is a manufacturing hub, right? Fine, till here everything is fine. I don't have to delve into this tax and everything because you will read it in environment. Then what's the problem? Everything is fine, right? What is the problem? Suppose a pension fund in Germany's pension fund, they want to invest in India. Why? Because Indian PSUs, especially PSUs. Why PSUs instead of stocks? Why they pick PSUs? Because PSUs are less riskier than the stocks, right? Private company stocks, right? They will pick the PSU. Why? And again, why PSU? Means PSU they will pay highest dividend. They will pay highest dividend, high dividend on the equity, right? I hope you are aware of the word dividend on the equity. Means the return on investment is high than compared to any other company in Germany, right? That is why foreign investors choose India as a favorite destination, because Indian stock market or Indian PSUs will offer lucrative return on investment, especially PSUs will offer high dividend on the investment. But Unfortunately or fortunately, they picked SAIL, Steel Authority of India Limited, because SAIL also one of the highest dividend paying companies, right? So what is the problem here? SAIL, we all know Steel Authority of India Limited is largest steel producer in India. I hope you are aware of that fact, right? Largest steel producer means, what does it mean? Largest emitter of CO2, right? What if the German pension company invested in SAIL? Bizarre, right? On one hand, European Union, their government is imposing carbon tax on cheap steel imports. On other hand, a company, a pension fund from Germany is investing in India's SAIL for high dividend. Then what is the solution? The solution is, these companies, these pension funds, foreign investors, ESG investors, they will come to India, they will conduct their own research, they will critically evaluate a company's operations impact on environmental, social and governance. Doesn't ring a bell, right? I will explain you in detail, especially in layman language. Suppose take the example of Coal India Limited, right? Coal India Limited or NTPC. These are the highest dividend paying companies in India. Don't look down on these companies. ONGC, IOL, Coal India Limited, NTPC, they are highest dividend paying companies. Okay, but what this ESG investor do? Before investing in a company, what will he do? He will assess the Coal India Limited company's impact on environment. What is the impact? CO2 emissions, air pollution, and what else? Groundwater depletion, soil contamination, water pollution, right? Deforestation. These are the negative impacts of those large companies, right? They will assess these impacts, the company's operations impact on these parameters, and then they will decide whether to invest in this company or not. Did you get my point? And second parameter is, let me repeat again, and second parameter is social factor. What does it mean? Social factor. They will assess a company's operation impact on social factor. We all know the thumb rule of a business is making profits, right? No entity is allowed, even though it's government entity, is not allowed to, let me repeat again. We all know the basic thumb rule of a company is profit making. This is the thumb rule of any company. Social assessment means, apart from making profit, what a company is doing with respect to employees' welfare, human rights and safe working conditions, social security, what else, anything else, did I miss anything? And corporate social responsibility, right? A company will assess these impacts. What are they? Employee welfare and social security, better working conditions. See, if you see the people who are working in coal mines, they have good salary, right? But still, what is the problem? The working conditions are not safe. So better working conditions and corporate social responsibility means, apart from making profits, what is the contribution of that company towards society, right? I hope until here everything is clear. Governance. What does it